So today we're looking at accounting ledgers. The accounting ledger add-on is a requirement for these functions to be available in FinPower Connect and is designed to assist in accounting for deferred income. Income can be earned over the term of the loan and transferred to the general ledger over that same period. For example, while an establishment fee for a loan may be charged as part of the opening process, it's often desirable for the finance company not to earn that full fee as income upfront. By adding an accounting ledger, the facility to progressively earn the income generated from the fee becomes available. This is also known as amortization. The way in which this is earned is determined by the method chosen. The ledger also defines the value to earn and the term in which it is earned over. Each ledger then creates a transfer of income to an accrual balance sheet account. As time progresses, each ledger moves back income to the original income account. This is particularly useful if the finance company has adopted the International Financial Reporting Standards, also known as IFRS, and for tax purposes. Out of the box, accounting ledgers, if configured at the element level, are added automatically if they are an opening transaction. Any other transactions that are added after the account has been opened will need an accounting ledger added manually unless custom scripting is implemented. As such, once an element has the relevant option set, if the transaction has been created as part of the opening process, the ledger will be added with a default status of hold. The accounting ledgers require activating in order to become live, as it were, and start reporting via the GL export process we discussed last week. There are three ways the accounting ledgers can be activated: manually, via the accounting ledgers page on the account itself, or in bulk or on an individual basis using the Activate Accounting Ledgers wizard or via custom script. At an individual level, the accounting ledgers page on the account form, which just so you can see, is a good place to view what ledgers are in place and to double check the amortization schedule. The initial configuration for accounting ledgers is completed on a per element basis, where there are several options available for use. Looking at the GL accounts page on the element, we can see there is a specific accounting ledgers section. Here we set the type, of which there are amortization schedule, simple journal, and none, to not use an accounting ledger at all. Using none will result in the transactions attached to that element being earned immediately. The simple journal gives the option to create general ledger entry transfer values from one to another, and amortization schedule, as touched on earlier, will create general ledger journals to debit a GL account and amortize over the specified term using the chosen earning basis or method, which we'll go through in more depth shortly. The method is selected in the next drop-down list, followed by the option to include a percentage to reduce the calculation by. In other words, a rate of deduction, which isn't available for all method types, as you can see. The option to split and apportion journals at month end, which will proportion the value of the journal daily at the end of the month, and general ledger accruals will be dated end of month. And finally, the option to include the opening entries in income reports. This option will include opening entries in the account income and forecast report to contra the original transaction posted to the account and amortize over the defined schedule. To exclude these, you simply untick this option. And there is also the setting up of the GL account for the unearned, where the unearned transactions are to be posted. This may differ depending on the finance company setup. For example, in our demo here, we have a specific GL account named Unearned Administration Fees. We also have another sample GL called Unearned Interest and another called Unearned Insurance Charges. It is important to note that although this is not a mandatory field on this form, because it's not mandatory to have accounting ledgers on each element, if the activation of an accounting ledger is attempted involving an element without an unearned GL set, this will error accordingly. Moving on to a more in-depth look at those methods. To show how each of the methods work and where they are configured in FinPower Connect, I thought it was best to show an example of, say, an establishment fee, each with some of the different options configured of the same value on a loan of the same value for comparison. The methods are what determine how the underlying element and therefore related transactions are to be amortized in the general ledger and effectively earned or accounted for. So the earning basis options are as follows. First is on date, which as the name suggests is earned on a specific date. And so we can see here in our example, the full value will be earned on the date set here. The next one is at maturity, which as the name suggests, the full value is earned at the account's maturity date. At close is earned on the account being closed, with the full value being earned once that account is closed. So you see here there's a bit of an arbitrary date in there because if it's closed early, you can't necessarily predict what that date will be. So proportional, which is earned evenly over the term. So if we look at our example here, we can see in the amortization schedule that the full value of the establishment fee is progressively earned right the way through the 24-month term. Proportional daily is calculated by dividing the number of days in the term times the number of days in the earned period. And in comparison with our last option, we can see there's a few subtle differences in the values throughout that 24-month term. Rule of 78 is calculated using the mathematical formula of the same name. Using the rule of 78 means that more of the charges are earned at the beginning of the term towards the end. I don't have an image here, but you would notice that it would start higher and decrease over time. And contractual interest, which is typically used for loans using pre-computed interest, like in our example shown here. And the accruals are calculated based on the contractual interest being charged over the life of the account. There is also a custom option available for use in conjunction with a script in order to amortize income in a way not already available out of the box. As I mentioned earlier, when they are first added, they're added with a status of hold. So next we're going to go through how to activate the accounting ledgers. So the Activate Accounting Ledgers wizard is found via the process menu and is pretty straightforward to run. It needs to be run regularly at the frequency best suited to the business. On the first page, this enables defining an entity and the date to activate accounting ledgers on or before this date set. The second page covers any range filters that may be required, of which accounts, account managers, account types, branches, and departments are available. The third page gives us a list of any due to be activated and includes an error column over here, which will report back if you click activate and any fail for any reason, in which case you can go and fix the issue and come back and activate it again. As with many wizards in FinPower Connect, you have the ability on this page to unselect any you do not wish to include. And an example of an error you may see, as we mentioned earlier, is of not having an unearned GL account attached to the element. So that's just a trick for young players. Once you click activate, the process is complete and the accounting ledgers will be active. Adding an accounting ledger manually is done via the account ledgers page on an account. Because it's not being added on opening, the default set on the element do not apply. And so the wizard must be followed step by step to set the details of the required accounting ledger. The new accounting ledger wizard takes the user through the process, requesting the following information, which essentially is the same as the preset defaults on the account, but also adds the opportunity to add a ledger to record against different GL accounts if appropriate. Page 1 has the status, which is always hold initially. You can choose the element from the drop-down list of the ones available. And the description can be updated here if applicable. And you can override or set the different types and methods accordingly. Same as the options available on the element itself, you can add the rate of deduction and add any optional classification or notes. On page 2, we record the opening date of the ledger, the value and the frequency, and the number of periods in which the earnings are to be released over. Page 3 gives us the amortization schedule, aka the accrual journals, which we can manually amend by clicking the Tools button down the bottom if required. And on the final page, defining of the unearned GL account, branch and department, and the earned GL branch and department, as well as the option to split and apportion journals at month-end options are available. You can also activate an accounting ledger from this page without having to run the wizard. You simply highlight the line and tick the little button here. Once your accounting ledgers have been activated, they can be exported as part of the export GL process, which we discussed last week. This, I think, as I mentioned last week, may be completed at a different frequency to the other exports or have a different date set. The wizard itself is the same one we covered last week, and any active accounting ledgers will export the initial transaction once activated, where it follows the following process. For example, an establishment fee of $250 is charged to a 24-month loan on opening and has an accounting ledger with a basis of proportional. The GL export for the first time will first debit the loan control account and credit the income account for the full value of the fee as per the standard process. Then, to facilitate the accounting ledger adjustments, it will debit the income account for the full fee value and credit the unearned income account. And finally, it will debit the unearned income account for the value apportioned to the first period in the amortization schedule and credit the income account when it is due to do so. For example, our proportional account doesn't earn anything until the 21st of January 2023, according to the journal schedule here. So we would expect to see that $10.42 in the GL export for the accounting ledgers in January. Ongoing, step 3, or these individual portions will appear ongoing in the GL exports as required until the account in question has been closed. In this example here of a GL export in the Great Plains format, we can see the example of the credit and debits occurring here. With the accounting ledgers add-on, you also get 2 reports which are very handy for the accounting ledgers, which is the account income and forecast report, as shown here, which has some pretty good content available. You can break it down by account and see projected income and so on and so forth. And the account unearned income report as well, which is a great little report, which will break it down. You can filter further by element types and also see a snapshot of what is going on with the accounting ledgers and the unearned income values, etc. Typical customizations for automation are popular for accounting ledgers. Larger companies often opt for a custom script to automate the activation of the accounting ledgers on the opening of the account. And other common customizations are scripts to automate the running of the Activate accounting ledgers wizard and the subsequent export of the general ledger. That's all I had prepared for you today, but as always, if there's any additional information you seek, please don't hesitate to contact application support for user interface queries or code support in relation to any code-specific questions.